Hi, everybody. This is Jeff Barton, and I appreciate you listening, watching to the show. Sorry about my haircut, my T-shirt, everything else that's going on, but let's get right to it. Lots going on in the mortgage market. Rates are really up, and they've been up all week. They're probably up a half a point in the last 10 days. 6.23% for the 30-year fix, 5.38 for the 15-year, 5.55 for FHA. That's a big deal. 5.55 for FHA. I don't think we've seen an FHA price like that maybe since 2019. The jumbo at 5.20 and the 5/1 ARMs at 6%. The 2 years at 3.518 and the 10 years at 3.25. So we're seeing a rise in the actual yield, but we are seeing more of a flattening of the curve. So we'll see what happens. We always think that the curve spread is really important, and certainly the 2 being more than the 10, i.e. you get more for the 2 than you get for the 10, is portending a recession. I do believe a recession is coming. I think a lot of people have finally given up the fact that this is going to be what they call soft landing. I don't really know what that means. If somebody's out of work, or if somebody's lost their home, or if somebody's in financial difficulty as a result of a recession done by the Fed, well, I don't know why that's soft. But regardless, that is where we are. The refi volume is down hugely. ADP says payrolls grew at 132,000 for August, 132,000 from the ADP payrolls, although tomorrow we should see Friday report, and they're predicting about 298,000 overall jobs were gained. It's what they call modest gain, but it does mean that probably the Fed will up maybe, I don't know, 75 basis points. Yes, that's a possibility, and probably to try to whack this inflation issue out of the park, 375 basis point rises in a row. For the Fed Open Market Committee meeting. That would be a big deal, but don't be surprised. And that comes up next month, or this month, actually, at the end of this month. So stay tuned. The Bureau of Land Statistics for Friday, as I said, expected 298,000 new jobs. We'll see. And the unemployment decreased this week. The weekly filings are down to $232,000. And that's down. So all of this things means that the labor market is still pretty strong, which means it could probably withstand another raise by 75 basis points. That's kind of what I'm saying. Okay, homes in Zoom towns. You know what a Zoom town is? I just found that out. It's a very funny term. During the pandemic, when everybody split from major cities and did remote work, I still have remote people who work at my company. Those particular areas, and it's one of the reasons why prices went up in towns that you couldn't believe they went up in, because a lot of people escaped big cities, went to smaller cities, bought up properties, obviously bigger, so that they could work from home. But these Zoom towns are now seeing, because of the pandemic restrictions have been lifted, and there really is no pandemic at all in the U.S. Even though there may be a pandemic, there is no pandemic in terms of what business is doing. So demands of people get back to the office, whether it's from Jamie Dimon, whether it's from a lot of the big corporations in downtown America, have left these Zoom towns looking at a lot of properties coming on the market, because people who did get to the Zoom town in order to do work are now going back to the city, because either they're required to do so, or it's just a lifestyle they like better. So that's a big deal. Price drops. 68% of towns with listings have seen drop in prices, i.e. 68% of the listings have dropped in price. Now that number 3 months ago was 10%. So you can see the market has really changed, and buyers in general have really gotten out of the market, obviously, because of rates increased, right? Okay, so where are we in this thing? Should we stop? No, we still got a couple of minutes. Okay, so Goldman Sachs predictions, 22% of new home sales, down 22% this year, 17% down of existing home sales, 8.9% down in housing GDP. That's all in 2022. So the predictions from Goldman Sachs, person's name is Jan Hatzius. 2023, new homes will also be down 8%. The existing home sales will be down 14%. Housing GDP, that's the gross domestic product for housing only, down 9.2%. So there is a big correction coming. How much in price, we're not sure, because price is still going up, even though we've seen the largest drop ever recorded since 2016 of housing price in general. And that is reflected in the 68% of housing in their listings dropping in their prices. Arrived Homes. You like this guy, Jeff Bezos? Anyway, you like him, you hate him. He's another billionaire looking to make more money. So he invested in this company, Arrived Homes. And what that is, it's a corporation that goes out, kind of like a REIT, buys properties, rents them out, except on a massive scale. They're expecting, because of the downturn, a lot of houses to go in foreclosure. They swoop in, blah, blah, blah. BlackRock did that during 2008, 2000 to 2010 recession. And they are still renting those properties out. Taking properties off the market, this is an editorial, by the way, taking properties off the market, not a good idea. Why? Because people need to live in homes. People need to get in on the appreciation that you get. Even if the properties don't appreciate, once they're paid off, that's a big chunk of change. And really, most people rely on that chunk of change, i.e. the value in their home, the equity in their home when they retire. So should corporations be allowed to do it? Well, anyway, Jeff Bezos in this Arrived Homes, he's the biggest investor in the company. They are planning to do exactly that. And they are trying to entice other investors. I hate the quotes anyway. Investors coming into the market, buying up shares of Arrived Homes from $100 to $10,000, and they get in on this equity. So people who have money, great. People who are trying to get a home and build equity, not so great. I'm against it. I'm Jeff. Thanks for listening to the Mortgage Minute. This is the Mortgage Minute, even though it's 6 minutes. Bye.